Hey everyone, Daniel Hayashi here with Hayashi Trades. So I don't know why it's not showing this, but I wanted to go over SPY with you and then talk about why SPY is something that I look at and how I usually trade it. So there's so many different ways of doing this, but I personally know if I'm bearish that I can either do SQQQ or SPY puts, or even one of my more recent things that I've been doing the past year or so is to play Forex and play, but more like trade. Look at USD, JPY, Euro USD, stuff like that. And we'll get into that in a minute, but right now let's talk about SPY. Now, I know that you probably remember, if you did watch this channel, that I did a video last week that showed this really nasty red sell-off candle. And so for the past 3 days, this week, Monday was pretty low volume. It wasn't really decisive one way or the other, even though we ended lower than we began. And you can see here we started at the 405s and we went as low as the 401s. And then today, Tuesday, there was a range between, 404 all the way down to 395. That's like $9 range. That's pretty intense. And then today, from 400 all the way down to 395. Now, if you're familiar with support and resistance, which I can actually show you in a video linked down below as well, you can see that we're kind of in no man's land here unless we bottom out at 395. But my technical analysis has me thinking more in the 390s. And if that fails, then we're going to be going towards 380. We can go to the 4-hour chart, but it's really messy. I'm not a huge fan of using this at the moment just because it's harder to see, but as you can see here, if you look right on this line, there is a little bit of support and reversal at the 390 level. And then past that, there's not really much volume here, but you can see that there's something that looks like it might hold at the 380s, but not as strong as this reversal here. Now, past history is a good way to kind of make a prediction of the maybe the future behavior in the market, but it's also not a guarantee. So we can only predict and react. There's no guarantees of the market, and the market certainly doesn't care about how we feel or what we want the market to do. It does what it does, and we can only make our best technical analysis and make our best trades based on what we know and probability. So anyway, we're also seeing here there's 370s as well. So 390s, kind of a weaker support, but there was a reversal in the 380s, 370s. So those are the levels that I'm looking at for bearish plays. But if I didn't even want to do SPY, all I would have to do is get an SQQQ call, which is the inverse of SPY, or I could just be trading Forex, which we'll get into now. And just basically the reason I like to do that is because as the market weakens, the US dollar actually gets stronger. Now, I'm not going to get into the nitty gritty of the economic principles of that, but just knowing how one affects the other and that they inverse each other helps you figure out what are you most comfortable trading and how do you trade when the market is going down, because there's so many different ways that you can do it. All right, so now let's jump into USD JPY. Now this is, in case you didn't know, is a currency pair, and it's the US dollar versus the Japanese yen. Now how it works is when the US dollar gains strength against the Japanese yen comparatively, it will go up. So as you can see here, it's been on a steady climb on the hourly chart, and we can skip to the daily chart as well and just have a good look at it, and then also to show you how different this chart looks than the daily chart for SPY, the S&P 500, which is why it's something that I like to look at and trade when SPY is very bearish, because it's very simple. They move completely opposite to each other with very rare exceptions. So yes, the daily looks very similar. It's just been on an uptrend since March, up, 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 up. Now looking at SPY over here, we're looking at the 1 hour. It just looks like it's falling off of a cliff. here's one cliff, here's another cliff. This one's a little steeper even than this one. Now if we go to the daily chart, like a mountain and another mountain peaks just falling off. And here, completely opposite. It's like you're climbing up a huge summit. Okay, so as you can see, they move very, very differently from each other. So you can be bullish on USD or USD based currencies, and you know that the stronger currency is going to be the one in front. So, for example, Euro USD is actually going to move up when the euro becomes stronger than the dollar. But if the euro is weakening comparative to the dollar, it's actually going to um, crash, or you're going to see a lot of red candles and a lot of selling. So if you actually think, okay, I think the euro is going to continue to stay weaker than the dollar, then you would trade that bearishly. Again, not financial advice. I'm just explaining how these things work. Okay, so for example, Euro USD, very, very bearish pattern. It's on a continuous downtrend, and that's because the euro has continuously been weaker than the US dollar. Okay, so not as dramatic as SPY, but you can see both of these are in an extreme downtrend, whereas going back to USD JPY, it's been showing so much strength, constant every single day. Okay, so now that we have that out of the way, I know that a lot of people have been hyped up about Tesla because of the 3-for-1 stock split. Now, those of you that don't know, I wanted to talk a little bit about stock split. So, is it a buy right now? Let's look at this Yahoo Finance article. I find very interesting. Basically, this is not the first time Tesla's done it. It's done it twice before. The last time was in August 2020. And the shares skyrocketed because it was so high. I believe it got up to the 1400s. And so the reason that the company does this is to basically, once they get to a certain price point and it's not accessible to many investors, or it's not an appealing price to many investors, they want to get more investors in. So what's the best way? Split the stock and then have it go down to a more better value for investors price point, and then get more people to invest in it. So overall, it's a win-win. What I'll point out is that the number of outstanding shares increases because more people invest in it, but the market cap, which is the amount of money and the value, does not. When they split the stock, that does not increase. Okay, so yeah, we've been seeing a lot of stock splits recently. I know a lot of people are excited about Amazon when it went from thousands of dollars to 100 or so dollars. That was pretty amazing. Oh, there we go, 20 for one. That is an amazing deal. So that definitely made investors more, okay, Amazon's at a reasonable price point now. We can invest in it. However, it never really exploded after that. It's kind of stayed in the 100 range. So that's interesting. But let's talk about stock splits. Like, what is it actually? So basically, as it's shown here on the Investopedia article, it improves the liquidity. Number of outstanding shares increases and the price per share decreases, but the market cap does not change. Okay, so we see some common splits: 2-for-1, 3-for-1, which Tesla did, 20-for-1, which Amazon did. And if you're already a shareholder, that means instead of having one share, you will get the number that it's splitting from. So 3 shares or 2 shares or 20 shares, depending. Okay, so now what in the world is market cap? Market cap is the total dollar value of a company's outstanding shares of stock. Okay, but what does that even mean? Well, what is an outstanding share? Outstanding shares are the actual number of shares that are being held by investors or institutions. So the number of shares that are owned by people. And that is pretty much it. So basically, Tesla wanted to increase investors' interest and basically restructure themselves to a more valuable price point, especially because of the price point getting higher and higher, so less accessible to value investors, but also because there's the idea of revenue as well, but we're also seeing the market go continuously down. So they're hoping, okay, even though there's a lot of fear, uncertainty, and doubt in the market, we want to give people more reason and the financial numbers reason to invest in Tesla. That's just my opinion. I think that obviously they want people to invest in them, and they want to grow as a company and make more revenue and attract investor interest. But when the market's doing what it's doing right now, a lot of investors are not super eager to jump in on long-term investments. Some of them are, some of them say, okay, like the famous Papa Buffett says, be greedy when others are fearful and be fearful when others are greedy. So that could apply here, but not everyone is comfortable buying when things are going down. So some people see an opportunity, others want to wait and see when the market bottoms, and then there's a lot of people in between. So anyway, that's what we covered. We talked about SPY, inverses of SPY, USD JPY, Euro USD, and Tesla's stock split. So do you think it's a good time to invest in Tesla or the market in general? Let me know your thoughts down below, and I will see you next time. Bye.